Thanks very much, Niall, for this very interesting presentation. Up next, our last panel discussion of the day on mainstreaming digital currencies. Joining us for this discussion are Bank of Canada, Sveriges Riksbank, the Central Bank of Sweden, Bank of England, and Barclays. If you have any question for this panel, please use the chat box on the right-hand side of the platform. The session will be moderated by Todd Herrett, Senior Regulatory Intelligence Expert at Thomson Reuters. It's my pleasure to hand it over to you, Todd.
Thank you, Alessia. Before I begin today, I'd like to thank Reuters for hosting the event. Also like to thank our incredible panelists for joining me today. And also thank you all to the audience for joining us and giving us some of your valuable time today. In the past year, I've spent a fair amount of time engaging and researching and learning about the incredibly new area of digital assets. And digital assets are an expansive universe that go far beyond Bitcoin. We go into many, many other aspects and how this new area will intersect with regulation is going to be and is becoming a monumental challenge. For today's discussion, we're going to talk about central bank digital currencies, which are completely different from Bitcoin, non-fungible tokens, and the rest of the crypto universe. I'm thankful to have with us today a great panel who I'm going to very briefly introduce, and then I'm going to kick off some questions, and hopefully we can have a very engaging dialogue. So first of all, I have with me Nicole Sandler, who's the head of digital policy at Barclays. She's our one non-central banker. Nicole focuses on the impact of fintech and regtech related regulation and initiatives, including AI and digital ledger technologies, use cases, such as crypto assets and central bank digital currencies. She also focuses on data policy and matters. She regularly engages with regulators and policymakers globally and represents Barclays in various policy forums and industry groups, such as crypto asset and blockchain roundtables. She's a regular presenter at conferences and has been named an Influencer of the Year and named by several organizations as one of the top women in fintech. Paul Chilcott is an advisor to the Governor of the Bank of Canada. Mr. Chilcott has more than 30 years central banking experience in senior positions involving oversight and payment systems, risk management, monetary policy, domestic and foreign currency, financial market policy operations. Most recently, he was appointed advisor to the governor in 2015. In this role, he focuses on payment systems, financial market issues, and he coordinates the bank's involvement with the modernization of Canada's national payment system. He leads the bank's contingency planning on central bank digital currencies and represents the bank at various bank international settlements committees, including the Market Committee and the Committee on Global Financial Systems. Tom Mutton is a director responsible for the central bank digital currency at the Bank of England. His previous roles at the bank include Director of FinTech, Head of International Policy Strategy, Head of Division of Prudential Policy, and has spent time as a senior manager responsible for the supervision of major international firms. Gabriella Guibor is an economist and head of applied research division at Sweden's Riksbank. Gabriella is an economist and has worked at the Riksbank since 1997. She's worked on the financial infrastructure division and the financial stability department with an emphasis on financial infrastructure and retail payments and efficiency issues. In the applied research division, she worked with macroeconomic analysis and policy and monetary policy related to issues and has contributed to the report for the evaluation of monetary policy that the Riksbank presents annually to the Swedish Parliament. As head of analysis and policy in the payments department at the Riksbank, she leads the analytical and legal work related to the e-Krona project. So to kick things off today, coincidentally, the Financial Times had a nice article earlier this week that talked about central bank digital currencies. The Financial Times cited two key concerns: the effect on credit and thus the commercial banking industry, and secondly, concerns over privacy. I know there's a whole lot more than just two concerns out there. So let me first of all toss it over to Nicole from the private sector aspect. What do you see as essentially the key drivers and risks associated with central bank digital currencies?
So firstly, thank you for having me today, and good morning and good afternoon to those in the audience. I think that's a really great starting question. I obviously did see the Financial Times article, and I think those two risks are ones which are known very well by our policymakers, including those sat on today's panel. Now, when I think about drivers, I think it's really important to note that it really depends on the different jurisdictions as to what your drivers may be. Now, I'd start by saying we at Barclays do see digital money as an enhancement on the current financial ecosystem when it comes to payments, but making sure the right design choices and the right use cases are clearly laid out will be really important in making sure this is done in the safest and best way without incurring excessive risk. So when I think about different jurisdictions, two really spring to mind. I'm not going to talk about the e-krona because Gabriella is going to be much better versed at that than I would be. But I think about the sand dollar and the digital yuan. And I think they're really interesting because, and I say this because my mum actually said this to me. She was like, do you work on central bank, things like central bank digital currency? She actually said it slightly differently, but I'm going to give the correct name, because of large technology companies. And I was like, well, Mum, actually, if I look at something like the sand dollar, which is the CBDC in the Bahamas, they've been looking at that since the 1990s. And the reason they were looking at this was because there are lots of different islands, and having ATMs on those islands was very challenging. So from a financial inclusion perspective, it was really relevant for them. When I think about China, they too have been looking at this since 2014. And they have a white paper which sets out their aims. Financial inclusion is one of them. Decline in cash is another. And obviously, during the pandemic, you've seen a decline in cash across lots of jurisdictions, if not most of them. And they've also talked about things like cross-border payments as a secondary aim, even though their digital currency is domestic. And they've talked about various other things. So when I think about drivers, those are some of the key ones, but it alters across the jurisdictions. I mean, I think cross-border payments is very relevant. And I've heard the Bank of England obviously mention that, but again, I'll leave it to Tom. And then there are other things such as geopolitical concerns and monetary policy and sovereignty, looking at trying to reduce illegal activity. So I think the drivers are really important. But then when you look on the flip side of those drivers, there are obviously some key concerns, and the FT did note too, but there are a couple that I think are also really worth mentioning. So reputational risk. I work for a large financial institution, and if something were to go wrong at Barclays, that's obviously really, really terrible. Now, if something were to go wrong at a central bank, that's frankly really unheard of. So from a reputational risk perspective, it's really important that the correct testing and stuff is done beforehand to avoid the reputational risk that could then follow. Because I actually think that would be quite disastrous. I think about things like privacy that was mentioned by the FT. Privacy is really interesting because I've actually heard some central banks note that as a positive, that if there's lots of data and they're the ones holding the data, actually they'll look after that data better than others. But on the flip side, it's a challenge because there is going to be a lot of data stored. There's going to be a really large digital footprint, and trying to work out whether, for instance, a payment should be anonymous or not anonymous, who is able to see that data, who is holding it, that's going to lead to a challenge. And that's actually why you see a lot more focus in terms of publicly on things like retail CBDCs rather than wholesale CBDCs, because the data element on a retail CBDC is much more problematic than, for instance, on a wholesale CBDC because of the personal data that will be held. We mentioned financial inclusion and the benefit. I'm going to go back to my mum. If she was watching this, she'd be quite unhappy at this point. But financial exclusion is actually a real problem because when I think about my mum during the pandemic, she's not that digitally savvy. That's no disrespect to her. I'm actually not that digitally savvy either, but I know how to go and buy something on Amazon. And she doesn't really love the fact that she has had to use cash less than she's had to use it previously. So it's really important to remember that there will be some people who will be included, but there are others that will be excluded, and which is why it's important that cash is going to continue to coexist, but also making sure that people are, they're upskilled in digital, because for those who aren't digitally native, this could be a bit more complicated than one might like. And then another one I'd like to add is on the green finance side. Now, there's two challenges to this. One is because of disintermediation. You've mentioned credit creation, and if they're at a time of crisis, or not even at a time of crisis, you could see a digital run on the bank, which would affect bank lending. No government can afford net zero, so they do need to rely on lending into the real economy. If banks aren't able to lend into the real economy, that could cause a challenge. But also on the sustainability side, this links to some of the design choice questions. We're not going to talk about Bitcoin and other cryptos because they're very separate from a CBDC, but I get a lot of questions about sustainability, and if CBDCs were to come to fruition, what does that mean from a sustainability angle? And that really will come down to the design choices that are made, whether it's proof of work or proof of stake. And I think it's important to note that there doesn't have to be a sustainability challenge with a CBDC. So those are a few of the things that I would kick off with.
Great. Thank you, Nicole. I'd like to remind all of our viewers, I think one of the key documents out there is the G7 principles that have been laid out. That you just highlighted several of them. It's available on the internet. I think the principles surrounding CBDCs that have been laid out by the G7 are very interesting. I think there were 13 points or 13 concerns. So let me throw it over to Paul for a minute. How do you see digital currencies fitting alongside traditional payment systems? I think there's an interesting intersection here. How do you see things from the Bank of Canada's perspective?
Yeah, no, I think it is, it's important to say that what we're talking about, which is basically the retail payments ecosystem, is, I think as many people know, it's very dynamic. I think it's more complicated actually than the wholesale sector, and it's changing more quickly. So this is kind of, any view is a little bit speculative. But I think one thing to say is that actually a lot of money has been invisible, to refer back to the title of the session, for a long time. Bank money is essentially digital, and even central bank wholesale money is digital. So a lot of these debates, I think, are not about sort of invisible versus visible. It's really about the role of public money in the ecosystem and the access to public money, especially by consumers. I think that that's one point. I think a second thing to say is that one of the developments, which I think is very significant, is the sort of launch planned or already taken place of new instant retail systems, electronic systems, and they offer a lot of promise in terms of actually many of the use cases that people talk about for central bank digital currencies. And I think whether they deliver on that promise, that will be important in terms of consumer demand and interest in alternative digital currencies, including CBDC. I guess the last point I make, and this refers back actually to something Nicole said, although the use of cash in payments is certainly going down in most places. Actually, the availability of cash, the demand for cash, is going up in a lot of countries, and that's true in Canada. So against that background, we've identified two scenarios, if you like, where we think there'd be a strong case for a CBDC. One is that the use of cash, or the availability of cash as a payments means, just diminishes to the point where it's just not widely enough usable. So that's a kind of that partly does relate to financial inclusion, exclusion, and I think it also partly relates to this question of consumers having the right to use central bank liabilities for some transactions if they want to. And then the other scenario is just where the use of we call them alternatives, but that alternative digital currencies, it could be a tech currency, or it actually could be a CBDC from another jurisdiction, becomes so prevalent that it actually undermines the unit of account. The Canadian dollar is the unit of account in Canada, and there I think there'd be the state, the government would need to respond, and certainly I think part of the response would be a CBDC. So that's how I would that's how I'd frame the kind of the broad case. But I think, again, as Nicole says, actually the case will vary quite a lot by jurisdiction, by the circumstances in that jurisdiction. So it's not I think it's not a kind of one one-size-fits-all thing.
Great, thank you, Paul. I'm going to toss it over to Gabriella. What are the key considerations for the Riksbank's strategy going forward with the e-krona?
Well, let me start first with commenting a little bit about what Nicole and Paul already said on the drivers for the Riksbank, because I completely agree that the motivations for the CBDC vary a lot across jurisdictions. In the case of Sweden, as you might know, Sweden is a very digitalized economy. The main motivation to start our project was the very rapid decline in the use of cash. Just to give you some figures, in 2010, cash amounted to 40% of payments done retail at the point of sale. Just 10 years later, it amounted to 9%. We have the share of cash in circulation to GDP is around 1%. It's really extremely low. And this is being driven by mostly demand, changes in payment habits and changes in technology for transactions. So there's nothing that we can do to, I mean, Nicole, I completely agree. We would love to cash to coexist, but we cannot force it to coexist if people don't want to use it. And regarding what Paul said, yeah, the demand for cash usually tends to increase in terms of crises like during the pandemic, but the use of cash, because cash has two functions, it's a store of value and also a means of payment. But the use of cash has, in Sweden and in many, many other jurisdictions, continued to decline and given an extra decline driver by the pandemic. So given that we were in that situation, we had to, in 2016, almost 5 years ago, we had to consider our options. And as Paul said, for us, the main motivation to begin to consider the e-krona, as we call the CBDC project in Sweden, was whether we would continue to provide the Swedish population with access to central bank money. We think this is a very important aspect of having a stable monetary system. To continue to provide the public with access to central bank money that provides the trust in the system, one-to-one exchange and to other forms of money. So we came to the conclusion that the access to central bank money was still important, but the technology needed to be changed. And this is something that we don't see as a complete revolution. We mostly see that as an evolution. This is not the first time that money changes form. And we are considering how to do that. You all know that we haven't yet decided to launch an e-krona, but if we would launch an e-krona, some of the key considerations that we have agreed upon in all the different international fora that have been in place in the last 2 years. Todd, you mentioned the G7. Of course, we participated there too. We were very, very happy and very pleased to be invited by the UK. We also participated in the CBDC, the group of central banks on CBDC, and we have published several reports in 2020 and 2021. And there we set out some of the key considerations at a very high level to begin with, and with the foundational principles that should govern the work on CBDC: do no harm. And there, Nicole, we're thinking of not causing trouble to the financial sector and not causing disintermediation, or doing this in a controlled form. We talk also about coexistence. We want to be not to have a too large footprint in the ecosystem of payments, in the retail payments. We want to have a well-balanced ecosystem with all different forms of money, and we would be happy if cash was there too. And third but not least, we want with CBDC also to contribute in promoting efficiency and innovation in the system. We have also agreed on core features that we need to have, but I don't want to take too much of the time, but these key considerations that we have agreed on internationally, those are the ones also governing our own thinking.
Great. Thank you, Gabriela. And we're going to get deeper into some of these, call them considerations, risks, and challenges here as we go. So let me toss it over to Tom with the Bank of England. In November, the Bank of England and Her Majesty's Treasury issued a joint statement announcing, the next steps in exploring a central bank digital currency. Can you give us a preview, or can you tell us more? What's happening with the Bank of England now?
Well, thanks, Todd. Yeah, probably not a preview because it's still pretty much up for grabs. What I can do, though, is explain a bit about the point we're at and the timetable from here. So exactly like Gabby in Sweden, and also I'm sure like Paul in Canada, we haven't reached a decision yet on whether or not we need a CBDC, but it's clearly a top priority to explore it. We are clear that a CBDC would coexist with cash for as long as people wish to use it, but also with bank deposits or other forms of new digital money if they're safely regulated. And I think our situation with cash in Sweden, is not quite the same as it is in Sweden. Ours is declining quite fast as well, but we're probably a few years behind the situation that Sweden's in. So cash, very important as a coexisting item with any CBDC. The stage we're in the Bank of England, I think it's kind of similar to the European Central Bank and also to Sweden and Canada, is we're in a research and exploration phase, and that will come together in a consultation paper jointly published by the Bank of England and the Treasury, so the Finance Ministry in the UK, which will come out at some point in 2022. What that consultation paper will explore is the idea of a CBDC, why we might want to do it, what it might look like in high-level terms, and then it will consider whether or not, and it's very much open, there's no decision taken, whether or not we want to continue to a subsequent stage. And that subsequent stage would be what we're calling the development stage. And that would be where we start to do the in-depth technical work to think about the technologies that would support a central bank digital currency, and to really kick the tires on whether or not this is something which is going to add value, but also whether it's operationally and technologically feasible. But what we're really keen to do is make sure that that consultation sets out the motivation for doing a central bank digital currency and the problems it might be solving before we start to dive too deeply into the technology work, because it's really important to make sure we have a consensus on what we want to achieve and whether or not a central bank digital currency will add value. Because probably the number one question I get is, what is it and why do I need it? And that's still pretty common, frankly. And if we were to go through the development phase, then we've said that the second half of this decade is the earliest point at which it would be feasible to launch a central bank digital currency if we were to do one. And obviously that's still an if.
I'm not going to try to pin anybody down on timelines. Obviously, this is going to be a lengthy process, and I think everybody is in kind of the planning stages. And so I'll throw out there to everybody in the panel, what could potentially slow or derail the process? I know we've talked about privacy and some of the other concerns. And I'm not going to try to pin anybody on any timelines, obviously, because this is really uncharted waters everybody's going into. What do you think, are the challenges or could slow or dramatically, potentially derail the process, Tom? And then we can go around to everybody and see what their thoughts are.
So one challenge, I think, for central banks is certainly a retail central bank digital currency, which is the type we're talking about today, requires us to develop a consumer-facing product. And certainly speaking for the Bank of England, the only consumer-facing product we have is notes, which we've done for a long time. And although we don't propose to deal directly with the public, so people won't have a bank account at the Bank of England if we were to do this, they would go through their digital wallet. That's where their relationship would be. We would still have to offer a product which was being used in very high volume by the general public. And we haven't done this before. We haven't been active in the space of retail payments. We concentrate on wholesale payments, and that means dealing with a very small number of very well-known counterparties in large value but low volume in large part. So that would be a massive change for us, and we would have to think really carefully about what that involved. And that's why it would take some time, I think, to get this right. We're not really used to developing consumer products, and I think it would take time to get merchants, to get retailers, and to get users comfortable with it, which would mean, I think, a lot of prototyping and piloting if we were to launch. And then secondly, cyber. It would be critical national infrastructure, absolutely no space for anything to go wrong. Nicole mentioned this, and that would mean taking the time again to make sure that this was the most resilient system we could produce. And then finally, on privacy, just a point to note, privacy and anonymity are not the same thing, so an important consideration there. But what we do know is that people will only have confidence and trust in money if there is sufficient privacy, and it really is a non-negotiable for us. We need to make sure that the public have trust and confidence in the money. So if we do a CBDC, it will have to meet the public's expectations of privacy.
Very good point. And I love that comment. Yeah, privacy is not the same as anonymity. I agree with you completely. And I would also confirm that I think the biggest fear, it would be the biggest hack or data breach of all time if a central bank were, under a cyber attack and held ransom or what have you. So Paul, what's your view from Canada?
Yeah, I mean, I agree really with everything that Tom said. I think the picture is, that picture is a very common one. I mean, just on the timing, I think the uncertainty is also leading back to our sort of scenarios where we see a CBDC as making sense. Is, we don't know how those conditions are going to evolve. We don't know how soon or whether either of those scenarios is going to take place. So that's there's that sort of uncertainty about the evolving payments environment. And I think as part of that, and this relates back to something that Tom said, you need to have a product that meets your policy objectives, but you also need it to be one that consumers and merchants are gonna want to use. And so that obviously does depend on what else is out there. And as everyone knows, in payment systems, network effects are very, very important. So again, you could have a brilliantly designed product in terms of your policy objectives, but that doesn't mean it's going to get the traction they would actually need to achieve those objectives. And so I think there's a tension there. I think the privacy versus compliance, I think it's a very interesting question. It's quite challenging from a policy point of view. And then when you've decided where you kind of want to be on that spectrum, basically who's going to know what, when, and after what process, then have you got the technology that can efficiently deliver that? And I think there are lots of different frames of reference also for looking at desired privacy. So some people say, well, you should have the same characteristics as cash, which is fairly private and even anonymous in some contexts, but not in others. But those conditions are actually, those characteristics are actually in a sense accidental. They're inherent in the medium, and where we've set up sort of subsequent electronic systems, actually society, if you want to look at it that way, has chosen a different balance. Then you could look at privacy maybe as something that would actually attract customers, almost as a sort of marketing feature in a world where maybe there are other payment methods, maybe tech ones, where there's less privacy, but maybe more convenience. And then I think there's a really interesting question as how much privacy do consumers actually want, or are they willing to pay for? And sometimes, you know, what people say they want in that area and what they revealed preference, if you like, can be different. And then another perspective, which I think has already been referred to, is, well, do you actually do you want a kind of regime where, in a sense, there's more not public visibility, but visibility, say, to law enforcement and others from a point of view of restricting the illegitimate uses of the central bank money, and that then it sort of goes into reputational issues. And I think these are different frames of reference. Until we've thought that through, we won't really know whether they all point in the, you know, in a consistent direction or in a different one.
So let me toss this over to Gabriella. You know, how is the Riksbank looking at privacy and security related to the e-krona?
Okay, let me back a little bit because a lot of very interesting things and good things have been said here, and I would like to comment on that too. Something that could derail the process, besides what Tom and Paul have been raised, is the legal aspect. Nobody has mentioned that. At least in Sweden, we need to have societal support to start such a big project as an e-krona or a CBDC, retail CBDC. And we don't have it yet. The Riksbank has written a petition to the Swedish Parliament to start an inquiry to see whether, among other things, it would be feasible for the Riksbank to launch an e-krona, and what kind of legal status such an e-krona would have. And the government started an inquiry at the end of last year, and they will come to a result on that on November next year. And without a positive result from the Swedish Parliament, then the whole process will be derailed. We cannot launch an e-krona. So that's the first, I would say, obstacle to be overcome. Then in terms of, I don't know, the English say privacy and the Americans say privacy. How do you pronounce the word? I don't know. Let's say privacy. In terms of privacy, of course, we agree with everything has been said. Our governor usually jokes that if central banks would invent cash today, they would probably not do it because we cannot have these completely anonymous payment method that is compliant with AML legislation and so on and so forth. So, but we do want to provide privacy to consumers. There are a lot of trade-offs, though. One is that we want to attract intermediaries. I'm not as pessimistic as Tom was when he said about the problem of developing something that users want to hold. I agree, and we need to investigate and examine that much, much more. But an anecdote, when we started the instant payments system in Sweden, we were one of the first to, it sounds like I'm boasting here, but that's true. And the banks were not very interested to begin with. Who needs instant payments? The consumers don't need it. It started in 2012. In 8 years, 9 years, it's such a success. 90% of the Swedish population use the instant payments every day. So we think that if we attract enough intermediaries to the e-krona CBDC platform that the central bank provides, that will probably find business cases and innovation areas to provide services to the end users find attractive. However, the use of payment data in commercial purposes is commonly used in the retail payment market. that's a source of income for payment service providers. If we say no use of payment data, this is my thinking. It's not the Riksbank position, because we don't have a position. So I'm just thinking aloud here. If we don't allow the payment service intermediaries in the e-krona platform to, at least in a transparent way, asking the consumers to, can we use your payment data? I don't know whether they will have enough revenue to be interested in participating. But as I said, privacy is important, but there are lots of trade-offs that we have to be aware of.
Great, thank you, Gabriella. Nicole, I'll toss it back to you. What are your thoughts on these areas, that we've been touching on here, from privacy or obstacles? How does Barclays feel about this, or how do you feel about this, I guess?
I mean, there are lots of challenges. I'm a lawyer by trade, even though I don't do law anymore. And I remember one night at 2 a.m. after doing a lot of due diligence, one of the partners said to me, it's about 15 years ago, there's no such thing as a challenge, Nicole. There's only opportunities. And I was sat there thinking, I'm not sure I agree, but I'm going to nod and smile politely. And so there are lots of challenges, but there are also opportunities that come off the back of it. And it's really important that we, as an industry and policymakers, and I'm going to use the word continue, because I do think it's continue to collaborate very closely on this matter. Now, I agree with a lot of the things that have been said. I think one interesting point that I kind of want to just weed out a little bit is, we talk about this at Barclays as well, and in industry meetings and with policymakers, the idea that it needs to be scalable and it needs to be usable. And if a consumer doesn't like it, they don't understand why they need to use it, they might not use it. And I was at Barclays the other day, and there was someone trying to buy a cup of coffee at one of the local coffee stands. And he was using his Apple Pay, and he could not, for the life of him, get his phone to be working to use Apple Pay. And I could see that he had his contactless card in his phone, and in like a little wallet in the phone. And I stood there just thinking, why are you not taking your contactless card out and just tapping? But it's because he'd got so used to using Apple Pay that even though, and this is nothing against Apple Pay, because I use Apple Pay as well, but even though in that moment it was not the most useful thing or most convenient thing to use, he still kept trying. And I feel like that's where CBDCs could end up, not because they won't be useful, but if people start getting used to using them and that becomes a means of payment that they're au fait with, then that's why it will continue to exist. So I do think it's important that people understand the merits behind it, but I don't think it's the only thing. It's the same with the privacy paradox. The idea that privacy is the most important thing. If I were to ask my mum, she would say privacy, it's really, really important. But actually, if we were to get into the weeds of it, and I said, well, you're giving up privacy when you're using, for instance, a specific platform. When you're using, I've got nothing against WhatsApp, but when you're using WhatsApp and you're sending me a picture, you're giving up some privacy, but you like the function, so you do so. So there are lots of paradoxes that exist. Gabriella talked about the legal challenges, but I think one of the other things that's been slightly touched upon but not really discussed is the regulatory framework that has to go alongside this. I like regulation. I work for a heavily regulated institution for good reasons, and I find the regulatory side super interesting. But I also understand that regulation has existed, particularly in the UK and in Europe, when it comes to payments for pretty much more than 20 years. There'll be a few regulations that have come in over the last 6 years, but most of them are ones that have existed for lots of years. And the payments ecosystem has changed dramatically. The borders between sectors aren't what they were, and new players are coming in. And we talked about disintermediation, but disintermediation comes in lots of different manners, and new players can also lead to disintermediation. So it's really important that the regulatory framework ensures that consumers are protected against these new players who previously may not have been regulated in the same manner. So the mantra, same activity, same risk, same regulation, I think is a really useful one. Now, I sometimes give the analogy of being on the road. Now, again, for full disclosure, I'm actually not a very good driver. But when I started driving at 17 and when I was driving in my 30s, I had to follow the same rules of the road. And when one of my friend's cousins had to start driving 5 years ago, she had to follow the same rules of the road as me as a new driver. But when I think about the payments ecosystem, if you've got the road and you've got a load of cars, you've got new drivers who are driving those cars. but they're not necessarily having to follow the same rules of the road. I find that quite complicated. But on the flip side, you also have new vehicles. Some of them potentially might fly. If that's the case and they're on the road slightly flying, what is the regulation that then needs to cover them? And those are sort of challenges that you see with the regulatory framework. One, where the perimeter needs to be widened, and two, where the regulation actually may not work for the new types of payments that we're looking at. And those are two challenges that really need to be dealt with, and they take time.
I'm glad you pointed that out. I agree. Regulation is what I do as well. And it raises the question of international coordination and cooperation. I'll throw this to Paul or Tom or Gabriella, whoever wants to jump at it. Will there be, and is there going to be a cohesive or coordinated global coordination of regulation? And what if a country or a jurisdiction decides, hey, we want to go slower, or is somebody at risk of being left behind? And can such a coordination actually occur on something that's this big or this complex? Tom, what are your thoughts?
So great question. So first of all, when we talk about central bank digital currency, we're talking about central bank issued money. So we need to be clear what parts of it we're regulating. Mm-hmm. So from a financial risk perspective, it will be risk-free. It's the ultimate safe asset. So it's a little bit different there. But at the same time, when it comes to things like the resilience of operations at the central bank, we actually hold ourselves to the same standards that we would hold private participants to. So when we operate things like our real-time gross settlement service, and indeed we have arm's length supervision of ourselves as a bank, if you want, because our Financial Market Infrastructure Directorate supervised us as a bank when we provide services to wholesale counterparties. So financially, I think central bank digital currency would be a safe asset, risk-free. Certainly, there are some operational risks. We would need to make sure that we held ourselves to the highest standards. But then I think the critical question around regulation is actually when you get to the intermediaries, so to the wallets or whoever else is facilitating access to the central bank digital currency. And then I think you do need to know that those private actors, those private sector firms are appropriately regulated. And then I think moving into sort of a broader comparison with the payments landscape, I think you want to know that there's a level playing field between central bank digital currency and other types of money, and that actually they're all regulated to equivalent standards in ways which take account of the specific setup and operations and features they may have. And you, Todd, mentioned the G7 reports. And one thing that G7 report made really clear was that there should be a level playing field, including in regulation, between private forms of money, which should be appropriately regulated, but also with central bank digital currency, so that neither has an unfair advantage. And in terms of international coordination, so that's all in a domestic context. In terms of international coordination, well, I mean, money is a sovereign thing, and decisions which are made in any country about whether or not to do a central bank digital currency and what it should look like, those ultimately will be for the authorities and probably, as Gabby said, the legislators in those countries. But at the same time, you want to make sure that cross-border payments work. And an important part of that is having interoperability. And one thing that helps with interoperability is standards and regulation. So we need to make sure there's a really vibrant and effective dialogue. And I think things like the Committee on Payments and Market Infrastructure, the Bank for International Settlements, the International Monetary Fund, and the Financial Stability Board are all working on those sorts of topics. And indeed, Cecilia at the Riksbank is leading much of the work in the Committee on Payments and Market Infrastructure around making sure that cross-border payments work. And obviously that goes into John Cunliffe, who's the Deputy Governor at the Bank of England. So some really important opportunities for international cooperation, I think.
Great. Hey, what do you think, Paul?
Yeah, I agree with all that. I mean, just to add a couple of perspectives, I think one thing to say is that although only I think a small number of central banks operate retail payment systems, some do. I mean, almost all operate wholesale system. Actually, Bank of Canada being one of the few exceptions to that, and so they're quite used to the idea of applying regulatory standards to their own payment system operations. So then you come on to the question, as Tom says, of, well, insofar as intermediaries are being relied on, even though it's not going across their balance sheet, what kind of regime do you need there? And I think that is an important question, but I think there are regimes sort of being put in place for other reasons that may serve a purpose there. And certainly in Canada, we're establishing a new regime essentially for non-bank payment service providers, and that could encompass aspects of provision of wallet services, for instance. This goes more widely than CBDC. It also extends to stable coins, for instance, and the services attached to them. So I think, you know, that's an important point. I think the other thing to say is actually a framework where rules are agreed internationally, but then are implemented, you know, according to local legal practices. I mean, that's very common, and I think it's been very successful. So CPMI rules, they're agreed by the central banks collectively now alongside securities regulators through IOSCO, and then they're adopted in slightly different ways in individual jurisdictions, and the same has been true for many years with banking regulation. So that's a model I think that does work. And I think the other thing that's also been shown to work is there are already internationally active payment systems where, again, CLS perhaps is the most prominent example, where effectively there are college arrangements whereby the relevant jurisdictions are all involved in the oversight of that infrastructure, even though in a legal sense the entity is based in the US and the Fed is the lead regulator. So I think there are sort of solutions to all these regulatory dilemmas, and I think none of them are really new. I mean, they may be new now in terms of, you know, the particular case of, say, of stable coins, but I think the sort of concept of needing to apply similar standards to entities that may operate cross-border, I think that is something that we've grappled with successfully in the past.
Great, thank you, Paul. Gabriella, do you have any thoughts?
I think that most have already been said. I completely agree. I see Nicole's fear and concerns, and I completely agree. We need to have a level playing field, and we need to avoid regulatory arbitrage. In terms of our own product, if we would have CBDC, we would be overseen, as we already are when we offer, for example, the wholesale settlement system, the RTGS, and that would be according, it's not regulation, but they are global standards that we have agreed on that Paul has already mentioned, and that those would also apply to potential CBDC platform. So no, everything has already been said, nothing more to add.
Okay, great, thank you. So according to my clock, we're about 45 minutes in, and we've got, you know, call it 10 or so minutes to wrap up. I want to throw out another question to the whole group before we circle around and have closing thoughts. One of the big challenges that I think everybody has touched upon directly is or indirectly has been, you know, you don't want anybody to be excluded. Is there a generational challenge associated with society? Let's say we all know younger generations are easily adopting these technologies, from, you know, Apple Pay to instant payments and things. You know, if I think about, you know, as Nicole was talking about her mom, I think about the same thing with my parents. How will central banks inform or educate from a PR perspective this challenge going forward, if and when we get to a point to roll these out? Has anybody contemplated, you know, call it the public education and engagement aspect? Gabriella?
Yes, in Sweden we talk about digital exclusion. We don't have much of a financial exclusion, but we do have digital exclusion, and it's 1 million persons in a population of 10 million, so it's not negligible. I think it's not only the role of the central bank. I think this is society and the government's role also, together with the private sector, to try to solve the problem in different segments of society. In particular, when we talk about the e-krona, for example, we talk about offering some variation of the e-krona that is easily used by people that have problems in using digital instruments, say like a card, for example, that even older. Of course, there are demographic aspects here. It's practically the older generation that have problems with digital instruments. But also other people, other segments of the population that may have people that newly arrived to Sweden, for example, from other countries, or people having functional variations. It is the role of the central bank to see that we offer universal access to at least basic means of payment to all. So we need to have variations to our product that serve all the people, or to see that other Swedish authority takes care of that if we outsource that situation. But this is a concern that it's very much in our minds.
Nicole, what are your thoughts?
So I think digital upskilling is super important, and I agree with Gabriella. It's not just a role for the central banks; it's a role for industry. It's a role for governments. You know, at Barclays we've got our Digital Eagles, which is all about digitally upskilling. A couple of years ago, I was very fortunate to sit on, and this name takes a very long time to say, the European Commission's Regulatory Obstacles to Financial Innovation Expert Group, ROFIEG. And as part of the ROFIEG, we actually spoke about the challenges of, I know it's a very long name, great group, terrible name. We spoke about the need to make sure that there was digital upskilling and how that would work, and the role that governments had to play, and the role that industry had to play, because the younger generations are going to be digitally native because they're born into a world which is so digital already, and the older generations and my generation weren't brought up in that manner. So there does need to be upskilling, because, you know, what Gabriella said, 1 million people, that's not a negligent amount, but you need to be pulling people along for the ride as much as they want to be pulled along. And so it is a challenge, but one that I think requires all of us to continue our endeavours on. Great. Whether it's through things like this or going into universities, there's lots of different ways of doing it.
Tom?
So a couple of quick points. So the first one is, if we do a CBDC, and it's an if, we can't presume that people have a smartphone. So it has to work on basic devices. That would be really critical. And then secondly, maybe I'm more optimistic, which is, I think that actually the experience of COVID has told us that people can learn new things, and they can change their behaviors quite quickly. And actually, I'm maybe a bit more optimistic that people, I'm not, you know, understating the importance of digital exclusion and the need to tackle it. But I do think that sometimes we convince ourselves that, say, older people, you know, will really struggle with technology, whereas actually many of these services, many of these devices, they're actually really intuitive things that people learn quickly how to use. And, you know, I certainly look at my wife's father. I mean, he's never used a computer in his life. His job was an entirely manual job. And he's self-taught just intuitively himself how to do all sorts of things, and he's really actually digitally independent. And therefore I'm a bit more optimistic. And I also think that you know, we're big fans of cash in the bank. We've done loads to make sure that it's inclusive. It's got inclusive features, particularly around things like visibility and accessibility. But cash does have its drawbacks. Like, people lose it. You can mix up the notes. It's not the most secure. I mean, you can have it stolen from you. I think it is a bit easy to draw a picture of you know, cash super inclusive and digital potentially, you know, not so inclusive. Whereas I think that's a bit of an oversimplification. And I'm a lot more positive about digital actually, and its ability to be inclusive.
Well, that's great. Great, we have an optimist. Paul, any thoughts?
Yeah, I think it's a very important area. As Tom says, central banks have spent a lot of time making sure that notes are widely available and usable, including by people with various disabilities. And any central bank digital currency would have to have that same kind of universal availability. And so I think it is, a challenge, and but it's a challenge that has to be met if CBDCs, I think, are going to be successfully launched, because it's partly, there's a sense of this is public money, so there's the social responsibility angle, and also it's addressing the market, I think, in a way, a market failure point. And so if you launch something that was just available online or through a smartphone, well, I mean, actually, there are plenty of payment methods that already do that. So I think taking the financial inclusion or exclusion, whichever way you want to frame it, point seriously, I think that's very important. I think there are solutions, as Tom says, but it will be it's one of the most important design issues, I think, as to how to think of something that works in all the necessary use cases. Just coming back to the sort of education, when we haven't decided to go ahead yet, so we're not at the point of doing that education, but we are doing work through focus groups and other things to get a sense of what we call the value proposition. So what kind of things people might want to see in a CBDC. So I think it is an important area.
Okay. Well, while you have the floor, I'll give you 1 minute for closing thoughts, because we have like 7 minutes left and 4 people to wrap up. Any final thoughts, Paul?
Well, I think this has already been touched on in lots of places, but a lot of these issues, they're ones where central banks have technical competence, if you like, but they're not. They go well beyond central banking responsibilities, and they touch on debates that I think in a lot of countries are now very active in civil societies, if you want to put it that way. Data rights, privacy, digital ID. They're kind of profound, I think, social issues, and I think money is part of that. And so I think these, in the end, these will be decisions for people and for governments whether to go ahead, not for central banks. I think that's important. People understand it's not a technical central banking issue by any means.
Right, just like the title of our conference implies, the future of money. Gabriella, any closing thoughts?
Well, I think that I agree with what Paul was saying. This is a very big endeavor that central banks have embarked on. If we do go ahead with it, and it will change the role of the central bank, or the capacity, the competence that the central bank needs in terms of resources and new recruitments is kind of different now. We need new kinds of competence, not only economists and lawyers. We need lots more of technical expertise, and we need also, when we continue in our examination work, we need to continue to have intense dialogue between central banks. So we share lessons and we share results from our examinations. And we are already doing that. We are in continuous dialogue with other central banks, and we do work together in different international coordination groups. And this is something that we need to continue with.
Great. Thank you, Gabriella. Tom?
So I agree entirely with Paul and with Gabby. I guess the final thought I'd like to leave people with, which is when thinking about if you need a retail central bank digital currency, so digital banknotes, I think it's really important to be clear about what the basis for comparison is, so what we're comparing it to. And I think if we make a comparison, which is, do we need central bank digital currency in a world in which we've got cash and bank deposits, that would be the wrong comparison. The comparison to make is a future state of the world, which might not be that far away, where we maybe have cash, depends on the country. As Gabby said, there's some challenges in Sweden, but where we have cash, where we have bank deposits, but also where we have new forms of digital money, perhaps provided by the big techs. And then I think the question is, do you want the option of a digital form of payment using central bank money, and will that add value? And I think making sure that baseline for comparison is really clear is absolutely essential.
Great, thank you, Tom. And last but not least, Nicole, what are your closing thoughts?
So my closing thoughts are, I just want to be clear that I'm not pessimistic about the role of the older generation using digital. I just think it's important to note that there are challenges and upskilling is required and has been required, but it doesn't mean that they're not able to use it or they don't want to use it. So I don't want to go and be like Barclays thinks that the older generation can't do X, Y, and Z, because that is definitely not the case. When it comes to, so Gabriella talked about how the role of the central bank may change, and there is definitely an element to that, but I think it's really important to note that the role of across the whole ecosystem could change, and what those changes will mean and how they're dealt with. Because this will be a change for everyone. Obviously, it'll be a change for the central bank, but it'll be a change for the current players and the new players. And it's how we all work together cohesively to make sure that that end state is the most appropriate for our consumers and for the wider ecosystem at large. And I think that's one of the reasons it will take a while to get this to fruition, because it's very, very, very challenging, but it's not impossible. And it may well be something that's absolutely necessary for all of the comments that have been made on today's panel, and I'm sure elsewhere.
Great, thank you very much. I'd like to thank all four of you. I think we've had a interesting and engaging and very entertaining debate, or not debate, but discussion. And I think we all agree on what some of the challenges are ahead. And I promised all of you in advance that I wouldn't pin anybody down on give me a date. When is it going to happen? I think we all understand why there is so much uncertainty in the future because of the size of this challenge. So with that, I'm going to wrap things up. I'm going to hand it back to Alessia.
Thanks very much, Todd. Thanks very much for all of you for participating to this debate. It was very interesting and very honestly remarkable to listen to everything that's happening at the central bank level. And thank you very much. Thank you very much for everything. As we come to the end of day one, I'd really like to thank all of the speakers that have participated and the partners again for sharing their insights and answering the biggest industry questions. Recordings of today's sessions will be available on this platform for up to 4 weeks after the event, in case you missed them or you want to watch them. And we look forward to seeing you all tomorrow for our final day, where we will explore customer strategies, embedded finance, regulation, and new emerging technologies in banking. See you all tomorrow.